Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for Singapore FinTech Festival coverage is Mriganka Pattnaik, co-founder and CEO of Merkle Science, to discuss institutionalization and regulation of crypto. Mriganka, it's great to meet you virtually. Welcome to Trade Talks.
Great to meet you as well, Jill. Thanks for having me. Greetings from Merkle Science in Singapore.
Well, next time, hopefully we'll be on the ground together doing this interview, but let's get right into it. Is cryptocurrency seeing serious institutional interest, or do you think it continues to be more hype?
Yeah, so I think this time around it's been in the news because of the price increases of late, but we're actually seeing serious institutional adoption, at least this time around, as compared to the previous hype curve that happened a few years ago. So I think there are two very good examples of this. So regulators worldwide have been regulating it. So the FATF, the global AML watchdog, has come up with AML guidelines for cryptocurrency. I think the US has been extremely active in regulating various aspects of it. I think even like the rest of the world, Europe has something. Every single European nation will have a cryptocurrency licensing regime. And Singapore has a very forward-looking Payment Services Act where this segment is regulated. So I think on account of all of this, you're seeing institutions being a lot more comfortable with cryptocurrencies. And the second major push, of course, is that every major bank now, like JP Morgan, Goldman Sachs, you name it, they all have a digital assets division. And almost all of them have been working on cryptocurrency custody solutions. JP Morgan, who's always been away from the space in the past, now has JPM Coin. Square recently invested in Bitcoin. PayPal launched a cryptocurrency service. So I think the world is more or less catching up this time around.
Well, Mriganka, let me ask you this. What's your take on cryptocurrency regulation? Isn't it against the core tenets of decentralized currencies where the principle was to move away from central bodies and banks regulating it?
Yeah, so I think in that sense, definitely it's away from the core principles of cryptocurrency, where there shouldn't be any central bodies, and this would lead to larger fintechs owning cryptocurrency or regulating their passageways. However, I think it's definitely a net positive, because even when cryptocurrency came about, I don't think the creators of it intended for it to be used in child pornography, ransomware, or money laundering. So it's just the natural evolution of the technology. Going ahead, it'll probably split up into two segments, the regulated and the unregulated. So the regulated would be the more mainstream things, like Bitcoin would probably be regulated. So mainstream adoption, banks, asset managers would be using the regulated services. And newer forms of like technology, like DEXs or whatever comes up in the next few years, would probably be unregulated and would still have the decentralized aspect to it. So I think, while it's away from the core principles, it's definitely the right way for it to evolve.
Right, especially if people want to start getting into ETFs and indexing, you're going to need some sort of regulation so it's more accessible to the retail investing public. But let me ask you this. Do you think overregulation would lead to growth of the industry or perhaps consolidation among a few larger players?
Sure, I think your example about ETFs was perfect. So especially if innocent people lose their money, then issues like this need to be regulated. You definitely don't want somebody to put their life savings in Bitcoin ETFs, lose all their money, and then regret that. So that all of this would probably need to be regulated. There will be a short-term consolidation of the industry because of the overregulation. However, this is financial services. So financial services like healthcare is a core to a nation, and it can actually affect the lives of people drastically. So I think definitely I'd welcome regulation, and over the longer term, you'll also see larger financial institutions getting into the space who have been shy about it in the longer run. So I think in that sense, over the longer run, you'll actually see large-scale adoption of cryptocurrency due to the regulation. And I don't think it's over-regulation, but actually the industry maturing from technology to fintech rather right now.
Yeah, that's a great point that you make. And Mriganka, to wrap up here, what factors would lead to a big push for institutional adoption of cryptocurrencies? And how many years do you think banks will start using cryptocurrencies?
Sure. So I think to answer your question, most banks have already started experimenting with cryptocurrency. But of course, it is a gradual process. I think there would be two main drivers for this. One would be regulations, of course, with different national institutions, central banks regulating cryptocurrencies. Financial institutions and banks would be a lot more comfortable entering into the space. So the US OCC issuing a letter that national banks can now provide crypto custody. So steps like this would definitely lead to faster adoption of cryptocurrencies or banks entering the space sooner. And the second one is more of a business push. So the fact that payment processors, PayPal, Square, all the other major players in the Valley are entering the cryptocurrency space would definitely be a big push for banks. They view these firms as their competitors. I think with COVID right now, there's a huge push for digitization and adopting new technologies. So I think overall, this would lead to the next big push for banks. So I would say that 2 years is a very good time frame for most banks to start adopting it in some form or the other. A lot of banks have already started doing it. And I think mainstream adoption would be 2 to 3 years like from now, though. Yeah.
All right. Appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.